Start with monthly recommendations. So first we have Reliance Industries. As you know, they are the largest company in India and the most profitable as well. Last year they had a turnover of over 9 lakh crore. And one important thing that we feel we need to speak about Reliance Industries is, in 2014, the company's revenue, the dependency on oil and oil to chemical sector on them was almost 75%. Right now, if you look at the last year's annual report, it was only 55%. So ever since 2014, they have introduced Jio, and even the digital, they have gotten very strongly, they have entered the digital space. So that is clearly seen. Even their retail have gotten extremely strong for the past 5 years. Since 2019 to 24, their revenues have almost doubled. So this is clearly showing a strategic change in the company right now. And they are also aggressively expanding into new energies right now. They have recently set up a plant in Maharashtra for solar cell production, and we are also understanding that they are planning to get into hydrogen and lithium-ion batteries as well. One more thing about the Jio, especially particularly Jio is, so when Jio started in 2019 and 20, the private equity players had almost more than 50% shares in Jio. And normally for private equity players, they would want to exit in another 5 to 6 years. That is the time period in which they look to enter. So we can expect an IPO for Jio and retail as well next year. Next we have Star Health Insurance. Most of us here have at least come across one Star Health Insurance agent in Kerala. There are over 7 lakh agents throughout the country. And the gross written premium, which is one of the most, which is one critical value we look into when we look into insurance company, that has been growing for the company for almost for the past 4 years, ever since COVID. COVID took a small dip and hit for most of the insurance company, but post that for the past 3 years, they have been recovering very well. And looking at all the insurance companies, they have been profitable. And right now, the government is planning to amend the existing Insurance Act. So once that comes into picture, the company will also be able to get into motor insurance as well. Right now they are not allowed to, but provided that the bill passes in the parliament, we can expect to see a good boost from them. And they are also a leader in bank assurance. So bank assurance is a model where they have a tie-up with most of the private banks in the country, public as well. So what happens is, when a customer goes there for normal bank functions, the bank will somewhere convince you to take the insurance. So this is a model that has worked very well for many of the European insurance companies. So they are a leader in that as well. Next we have Transport Corp. So Transport Corp is a multi-modal logistics company in India, and they have a joint venture with they have a joint venture with a Japanese company, 2 joint ventures. They are also very good with cold chain logistics, which after many years is becoming profitable for most of the logistics company. This is a great opportunity for them, because for the past 4 years, when we have seen most of the logistics company, the cold chain sector particularly they have not been having good margins. And also they have a very strong balance sheet and good cash flows as well. So domestically we expect them to at least boost around 15% in the coming few years. And compared to all the other logistics company right now, they seem to be fairly valued. Most of the logistics companies that we are seeing, they are not even profitable, but at the same time their prices are very high. Valuation seems very high, but they are profitable at the same time. Their valuation is on a fair value range right now. Next we have Vardhman Special Steel. They are a prominent player in the special steel market. Again, compared to normal steels, special steel has got better margins. And Vardhman Special Steel has a strategic alliance with a huge Japanese company called Aichi Steel. So Aichi Steel also owns around 11% market share, 11% share in Vardhman as well. So we expect this partnership to bear fruit in the coming years. So looking at their capex right now, and capex expansion, and also looking at the potential of capex, we can see that their exports could easily go up to 20%. Right now, 5% of their revenue is coming from exports, so we can see it going up to 20% in next 2 years. Finally, we have JM Financial. It is a non-banking financial company. The company has been in a little bit of a regulatory issue in the recent past, but why we are recommending JM Financial is because they are into investment banking, credit mortgage lending and asset management as well. The credit and mortgage lending part of their business has not been doing well for the past 4 years. Margin has been very low. So around 3 to 4 months back, the management has announced that they are planning to reduce that part of the business. So all the cash that is held up there, we can expect them to give dividends in the next year. Not this year, but it could be happening in the next year. Now we'll go look at last month's review. So we have recommended 5 scripts. In that Sumitomo and FDC, we have already achieved the targets. Last month anyway, the hold period was more than 6 months, so there's no need to sell any of it. You can still hold on. Colgate, Lupin and Consumer, you can still hold. Nifty was little volatile last month. The Nifty return was 5.8 looking from the last meeting we had, but the stocks that we gave a return of 9%. Okay, thank you.